We're joined now by Dr. Todd Hubbs, our OSU Extension crop marketing specialist. And Todd, there's been a rally in the wheat markets. Kind of give us an idea of what's behind it.
Yeah, a huge rally, over 60 cents in the last week, basically on the conflict in the Black Sea escalating. We saw shipping in the Sea of Azov and the Kerch Strait from Russia shut down. Russia was striking ports from Ukraine. This is a major grain corridor for the world, and for that to shut down just put a risk premium inside the wheat market. The wheat market sort of drug the other crop markets up with it. So a massive rally that we needed. I hate it why it's happening, but it's really good for our Oklahoma producers.
When we look at the futures market, what are you specifically focusing on?
Well, when we look at nearby prices, we're back up to levels we saw after the May WASDE release, which was very bullish for wheat. Nothing like we did when the first Russia-Ukraine conflict kicked off back in 2022. Well below that, but we have a lot bigger stocks in the world because we had big crops last year. There's some issues in the Northern Hemisphere. There's a heat wave in the EU. We're going to see how that turns out for their wheat crop. I'm more concerned about their corn crop than their wheat crop, but you might see some bushels come out of the EU. But when you combine that with what's going on in the Black Sea and crop and goods not moving, it did provide a really good support. Now, how long will it last? That's the big question. There's always workarounds. There's rail. There's ways to get stuff out, and things need to move. Additionally, at these elevated prices, do the world big demanders really come in strong? North Africa and Middle East, we saw them have pretty good crops this year, wheat crops. And so, what's their demand going to look like at these elevated prices? So it's a big question if this will carry through. What I always say, it's probably a good idea to reward rallies because time in the market's extremely difficult.
You have that global map where we can have some really kind of black and white understanding of where the United States fits in with the rest of the world. Talk about that.
Yeah, I just make a price map of the globe from International Grain Council data from last week, just to give an idea of where our HRW price sits relative to our competitors, and that rally put us well above the world. Now we tend to be, due to our quality and where we ship out of, but when you're that elevated with the conflict in the Strait of Hormuz kicking off again, so transportation, are probably going to be elevated, it makes competition tough. Now, if there's nothing coming out of the Black Sea, our competitors look different, but it's still going to be, we need to be not too far away from the global market, and this little rally sort of pushed us higher than most of the world and most of our competitors, significantly higher. So we'll see how it turns out. I'd love to see this rally stick and move forward, but that doesn't tend to happen usually.
Switching gears a little bit, you're also keeping an eye on the corn and milo prices. Discuss those.
Well, we've seen the corn price, they sort of got lifted with the wheat market move. We're still looking at how the crop's developing, particularly in the heart of the corn belt. We saw a little bit of rally in corn, but you wonder if that's run out somewhat, because right now there's no reason to fade the USDA yield number. I think another shot of moisture through the heart of the corn belt might make that crop. We'll see how it turns out. We're still in the pollination phase for a lot of the corn. Down here in Oklahoma, I think a lot of this dry land corn's been made already. We're already thinking about, dry down. It looks pretty good, I think, for a lot of places in Oklahoma, which is a good idea. And so the price is probably going to have a tough time running up, depending on what happens in the wheat market and other markets in general. So I think right now we're just waiting to see how this crop turns out. Demand's still really strong. Now when we get to milo, the spread between milo and corn, particularly here in Oklahoma, to get closer to parity, we need really strong exports, which means China, because China takes anywhere from 80 to 85% of the world milo imports. And so if we're going to do over 200 million bushels of exports, the vast majority of them are going to China. We've seen our export pace slow down significantly in the milo market recently. I'm probably not going to make USDA's old crop forecast, but it'll be close. The question is, will we do over 200 million next year to bring that gap between the milo and corn price down? It's difficult to say for me because it seems like everything these days is wrapped up in politics and trade negotiations. So the volatility is just really, really high. So I'm hopeful for our milo crop. The conditions aren't great. USDA's yield's probably a little high. We probably will see production come down for milo in the U.S., but the demand, right? Are we going to move it? So I think it's sort of a wash at this point when I'm looking at it, but I'd love to see some strength. Our basis is really weak in milo, and it has been for quite some time. And it started last year when we got in the trade war with China, and they just stopped buying milo completely, and we've had a tough time recovering.
All right, Todd, great information. We'll continue to watch those wheat prices, and we'll see you again very soon. Thanks a lot.
Thank you.